Hello everyone, welcome to today's video. In this video, I'm going to talk about my top 3 stock picks for 2023. So my top three stock picks for 2023, and I would like to also explain to you the rationale behind me being so obsessed about these stocks and why I'm so excited for buying them at these prices. So one of the main reasons for that is it's a very good news that inflation, which completely just got jacked up over the course of 2022, and over the beginning of this year 2023, that inflation that caused so much of a mess. I think you must have already seen it in the papers, you must have heard it on news, that the inflation is getting out of control, the interest rates being rise rapidly by the Federal Reserve in the US, and the RBI governor is also very much concerned. I mean, if you just go and read the RBI's letter, the RBI governor's letter recently released in the rbi.government.in, you would actually see that that the interest rates are going to be up for a little bit, for a little while, but it's expected that as the inflation eases up, they're going to rapidly going to bring down the interest rates. So far the 2023, the outlook for 2023 is that the first half of the year, or maybe like the first 6 months, first 7 months, is going to be a little bit of a volatile year for the markets. So why am I saying that? It's because the inflation data has been very good recently. The consumer price data is also very good, but the problem is inflation is a lagging indicator. That means that you are actually looking at the data that has been recorded over the past few months. So it takes some while for the real numbers to be falling in the hands of the Fed, and they will be like, oh yeah, the inflation has come down. Now it's time for us to reduce the interest rates, because they can't let the stock markets fall completely. So that's the outlook for 2023. So what do I think about this narrative? I completely agree with this. I mean, if you see the narrative of some of the well-known economists, like if you have recently seen the IMF's commentary on 2023, they said that it will be a slow growth year because Europe currently is going through a very deep crisis. Europe is going through a debt crisis, coupled with its energy crisis that it recently has. So the problem is European markets are going to be more volatile than other markets compared to the world. India seems to be in still of much more of a brighter spot when compared to other countries, but still, because India depends on a lot of its services, for example, Infosys and TCS, some of the high-end service companies, they are dependent upon Europe for their most of their business, for a large proportion of the business. For example, TCS has most of its revenues coming from of approximately 15% of its revenue coming from the United Kingdom itself. So you might expect how much it's actually coming from the Europe. So as a whole of Europe seems to be in this very, very, very tough environment, we could actually do not expect that the situation will be eased up, at least by 2023. And maybe it's going to linger on for even more years in Europe. But the American markets, on the other hand, they seem to be doing very well. It seems that America is in kind of like a dilemma. They're still talking about if there is a recession, is there not a recession? Like, are we already in a recession? Because the jobs are still open in the United States. The labor force, the labor market seems to be very strong as well. So it's kind of like a dilemma where Europe is very much likely to experience a very medium to high scale recession. USA, we don't know. I mean, if it's ever going to be, it's going to be maybe a mild recession. So the same commentary applies for India, because India is dependent upon USA for most of the goods and services that it produces. So the US economy plays a very important role, because the USA is the dollar is the reserve currency of the world. So United States plays a very vital role when it comes for all these macroeconomic situations. I mean, if you have generally observed the trend, when the USA markets in 2008 crashed, the Indian Nifty also crashed. I mean, in 2016 we had some supply chain problems, and even then the market tanked. And even in 2020, well, that was common for all the markets. So because we are right now in a globalized economy, it's not completely credible for you to believe that one markets will not be affected by the other. We are very much intermingled. So just because the European markets are not doing well, that doesn't mean that it's very good for India. But India still seems to be a brighter spot because our competitor uh, in our region, that is China, is actually in a major crisis in and of itself, right? The Chinese economy is in deep trouble. The Chinese economy is in deep trouble. They have a real estate crisis, much like the 2008 real estate crisis, the housing market crisis that happened in the United States. So they have a real estate crisis. They also have a lot of problems when it comes for COVID as well. So their no COVID policy had completely made the global supply chains completely disrupted. Now people are looking for alternative, more viable manufacturing powers, and India seems to be in a very good spot for this. Now, going forward, what I expect that 2023 will be divided into two parts. The first half will be a very volatile, and the second half of 2023 is going to be great for markets. It's going to be great for markets. So why do I think that? As the inflation comes down, the Federal Reserve, which has completely hiked up its interest points, will start bringing it down. And that's the point where the markets will start rallying for every point of decrease in the inflation. And always remember, rich people, wealth is generally created in the bear markets, not in the bull markets. Because people who buy excessively in the bear markets are the people who actually live in the bull markets. So you have to learn to bear through the bear markets through to live in the bull markets. So it's as simple as that. So for this year of 2023, are there any stocks which I consider will be giving a massive run up? Yes, there are three stocks, actually four stocks, which I feel very bullish about. And these are not, small cap or some mid cap stocks. These are actually large cap stocks. And I really do think that the 2023 or the end of the 2023 is going to be a great year for our country. And I will be explaining the rationale behind it. So let's march ahead to our first stock, and that is none other than Asian Paints, guys. It's none other than Asian Paints. Now, looking at the current price of the stock, Asian Paints is trading at around 3,087. Now, that is like around 9 to 10% low from its all time high, which it made a few years back. That is 3,576. So it is actually trading at a wide discount to its actual value. And why do I say that? I mean, if you're looking at the balance sheet, um, now you might ask, why did the market fall in the first place? Typically, the market was not really good per se. The Indian markets were quite resilient, but a stock such as Asian Paints to fall, like 10%, because it's a market leader in the industry, it's a monopoly in the paint industry. So you might ask, why exactly did it happen? The problem is the inflation was rising up, and the materials and all the other necessary materials needed for making paints and all, the prices of them went up, and the Asian Paint was not able to raise the prices of its paints, of its products, as easily as a company such as Hindustan Unilever. For those of people who don't know what exactly is Hindustan Unilever, well, you might just consider it the 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 largest consumer consumption company in our country. Like, all of the well-known brands are from HUL. So the people right now, I think you might have observed it, some of you, that the prices of some of your essential goods and essential products has come up, but the prices do not go up that much that we actually think. I mean, they went up a little bit, but we are talking about, and on an average, the prices have gone up by a lot, even though the average retail buyer might not have actually observed it, because there's, for example, a 30 to 40 rupees increase isn't really that much, but if you're looking at a percentage basis, that's exactly like maybe like 7-8% of increase. So that was the problem. But the problem is but the good news is, even if the prices of these materials increased, Asian Paints was able to maintain a return on capital employed of 29.7%, which is quite amazing, guys. I mean, for those of you who don't know, ROCE is the amount of money or cash the company generates for every rupees invested into the company. So Asian Paints currently stands at 29.7%. Anything about 20 is considered to be really amazing. And Asian Paint is a cash flow machine. If you just look at its ROC, 29.7%, even in a high inflation environment, the company has been able to preserve its ROCE by that much of a margin. That's actually quite good. I mean, if you're looking at the income statement as well, if you just look at it, the sales have generally been on the rise. There's no problem with the sales. They're sitting on their highest ever sales. The operating profit has a little bit come down. The one of the main reasons why this has come down is because the expenses increased a little bit. And this is the reason why I said that the inflation environment typically create a lot more expenses, because the goods and materials that are required for making these paints, the prices of them are jacked up, because of which the Asian Paints had a little bit of problem in showing in this operating profit. But does that mean that this situation will continue even in the future? I don't think so. The inflation is coming down. The prices are already down for many of the commodities and essential goods. So I don't see a reason why the operating profits to again increase. I mean, if you're just looking at it, they're sitting on the highest ever sales. It's not like people have not stopped painting their homes. It's just that the company has not been able to raise its operating profits related to inflation. But low inflationary environments, but generally, if you're looking at the ROC, 29.7%, that's quite resilient. And a stock such as Asian Paints will not be able to sit at a 10% down from its all-time high for long. I mean, you're getting it at a fair price, guys. I mean, Buffett always said that, you know, if you have to choose between a good company at a fair price and a great company at a fair price, or a good company at a wonderful price, always choose the former. So that's what I'm saying, right? I mean, if you're looking at the operating profit margins, it's 19 to 24%. Right now, it has come down to like 18%, right? I mean, if you look at it, 18%, it's actually quite good. 18% itself is actually quite good, because it still has been able to retain it. And now, as the market continues to ease down in inflation, these margins will be up. Now, if you look at the profit before tax, they have basically on the rise much more than the other years. So the profit before the taxes has been really good. The profits after the net profit after the tax that has been falling on these profits, you're actually looking that they are actually sitting on their highest ever profits. So there's no problem in that. The earnings per share, that means for one share, how much is the earnings? That means for every 1 rupee that the investors are putting in, the investors are earning 10 rupees, which is actually quite good. If you're looking at the profit and loss, the sales are at their all-time high, guys. There's no problem with their sales. Their operating profit has also increased a lot. This is consolidated, guys. I mean, Asian Paints has a lot of subsidiaries as well, so it's a consolidated. So if you look at standalone as well, you'll be able to see the same thing. The profit before tax has generally been very increasing. So the operating profit margin is what the problem is. 22% in 2021, and now in March 2022, you are sitting at 17%. So that's basically the problem. Now, if you're looking at the net profit, profits have generally been on the rise. I mean, if you're looking at the compounded sales growth, the sales growth has been growing at a wonderful 12%. If you're looking at the last 5 years and the last 3 years, 15%. See, in the final analysis, a stock in the long run will return as much as the business it underlies, right? I mean, if a company is able to actually only able to earn 29.7%, right? And in the long term, how much return can you basically expect year on year? That would be approximately the same. In the short term, things may be very much cloudy. For example, Adani Enterprises, which have taken a lot of debt and they have grown, but do the fundamentals actually justify such high valuations for something like Adani Enterprises? No, not at all. That's one of the main reasons why I'm very much bearish on that stock. So if you're holding it, maybe you should think of selling it. It's not an investment advice, but I generally do think that the stock has given up a lot of run up in the coming in the previous few years, that I don't see it completely replicating the same good performance that it has shown over the past few years to continue on to the future, right? Now, the next thing we want to see is the balance sheet, guys. I mean, Asian Paints balance sheet is one of the best sheets that you'll ever see. Its total assets are like 22,958, guys. I mean, if you're looking at its fixed assets, investments, it has been investing rapidly as well. See, one of the very good things that you need to see about a company is the company investing a good proportion, a good chunk of its money back into its business? I mean, are the promoters interested in the business? They believe that the business will be here for the long term. Are they looking for other avenues? For example, I would not say the name, but Mahindra and Mahindra, I think that is a company. I think you must have heard of the cars of Mahindra, but right now they're moving away from the automobile business because the business has quite much, a little bit stagnated. The car sales are not going up. It has remained almost constant. So they are basically searching for other avenues. So they are moving out of the niche kind of industry into a new industry, which creates a much more risk for the investors. Asian Paints doesn't have that problem. See, people have just started earning money in this country, right? People have just started building wealth in this country, and more the wealth that is going to come, the more amount of houses going to be built, the more amount of paints that are going to be ordered. And what kind of paints do you order? You order Asian Paints. There's no other paints out there. Berger Paints, and Asian Paints is actually has owned a subsidiary of Berger Paints as well. So basically you're seeing the whole narrative, right? So it's a very good stock to hold. The assets are quite good. Now if you look at the cash flows, so basically cash flows are the amount of money that is flowing in or out of the company. So cash flow from the operating activities has increased a lot. So operating activities means as the company is completely making up its operations, the amount of money it generates, amount of cash it generates from its operations is referred to as a cash from operating activity. It's so you can see the cash from the operating, so the plus here represents that the cash has been coming in, minus means that the cash has been going out. If you look at the cash from investing activities, they've invested a lot of money during 16 to 2018 to 2019, and they're seeing the benefits of that right now. They've decreased their investment activity because now the investments have actually begun to show their results. If you're looking at investing activities, fixed assets, they are purchasing, they have reduced their assets purchase because they've already made a lot of purchases between 2017 2019. That's when the market was down. And they are also financing a lot of it, and this is the net cash flow, right? What you need to really consider about, guys, is the cash from the operating activity minus the amount of capital expenditures. That is a very much positive value. So all around it's a wonderful stock to hold. And the debt to equity, like if you just look at the debt to equity of the stock, guys, I mean, that's, could you believe that the stock has, okay, we don't see the debt to equity in here, but let me tell you that the debt to equity of Asian Paints is approximately zero. So it's a zero debt company. It's almost debt free. It's a wonderful company to own. So this is the first stock, and I give a target of 44,300 to Asian Paints, and this can happen over the course of 1 or 2 years. And now, if you're looking at a 2 year CAGR, I mean, if you're going to do 43 divided by 2, you're getting an handsome amount of money of minimum 21.5 return year on year, or even for 3 years, you're looking at more than um, 14% or 13% returns, which is actually quite good, right? The next stock that I really like is HDFC Bank. I mean, I have been a big fan of HDFC Bank. I've been aggregating it when the prices were really low. People were saying that why HDFC Bank is not performing very well. It's over, it's done. Come on, guys. I mean, what's the leading private bank in our country? It's HDFC Bank. It's not unlike SBI. It's not unlike other Punjab National Bank or other banks which are generally just, you know, giving out loans to, people like Adani, and they default on their loans, and then they're not able to pay them back, pay their investors back, the investors being the depositors in the bank. But HDFC Bank has been known for its amazing quality. It's actually sitting at its all-time high. I basically started holding HDFC Bank at around when it was trading at 1300. You're sitting at a quite more of a good profit right now if you have held it up to this particular point of time. Now, why do I see there's a lot of growth going forward? Because in the beginning it was trading at 1660. 1 year back, it was at approximately trading at 1519. I started holding HDFC Bank at around 1400 or 1300. So why do I still think that HDFC Bank it will be giving a run up? Because understand the rationale behind this. It's going to be very simple. For any economy, for an emerging economy, that too, the banks are the backbone of the economy. They are the ones who provide the loans, and HDFC Bank is a market leader. HDFC Bank is a wonderful business. They are one stop solution for all the problems that that the person comes into the bank has. I mean, they have a mutual fund house, they have this housing loan house, they also have their banking sector, they also have credit cards and debit cards. You see all sorts of money making machines. They have all kinds of services. If you go to HDFC Bank, you open an account there. After a few days, they'll be calling you, they'll be asking you, well, do you want a credit card? It's like, yeah. It's like you get a credit card, and then they call you a few days back and says there's a mutual fund, there's this life insurance scheme. So basically they have a hell of a lot of businesses. So you're looking at a money making machine, and that to a bank such as HDFC Bank, which is the leading private bank in India. I think it's only comparable to ICICI Bank on it. The banking has not given that much of a run up. For a developing economy, the banks generally tend to be more of an runners when compared to the average, because the banks are the one who give out the loans. So when the stocks are going up, the banks automatically go up. The best way to look at HDFC is to look at the profit and loss statement. Remember, always when you're trying to analyze any banking stock, always try to see its profit and loss statements. Do not make any decisions based on the cash flow statements. That isn't how banks are generally judged on it. And you don't see ROCE in the banks. What you see is basically, see, 5.83%. And you were only saying that 10%. See, banks are not judged by their ROCE. Banks are actually judged by the return on equity. That is 16.6%. So there are different kinds of stocks, and different kinds of stocks should be valued in different way. And the best way to analyze a banking stock is to look at the ROE, and to be looking at its profit and loss statements. If you look at the profit and loss, you're actually looking at equity. If you look at the quarterly result, is the profit and loss consolidated figures. The profits are generally, they're sitting on the highest ever profits. Expenses, they've also risen up a bit. The operating profit, financing profit has increased. Their profit before tax is right now sitting at an all-time high. So basically this is a very good stock. That's one of the main reasons the stock is on the rise. If you're looking at a 3 years CAGR 9%, which I think is quite low for a bank like HDFC, which is why I see um, there's a lot of ground to be covered yet for HDFC banks. The balance sheet's quite good. Don't look at the cash flow statements. The net cash flow, if you look at it, for some years it'll be negative, for some years it'll be positive. But if you right now, if you see, it's quite much positive. The operating activities, generally the banks generally give loans to people. That's one of the main reasons it's negative. So don't look at the cash flow statement, always look at the balance sheet and into the profit and loss statement. Right? I mean, if you're looking at promoters, the promoters have generally maintained their share price, their proportion, their percentage constant. The foreign institutional investors, see, the Euro Pacific Growth Fund has generally increased its, the common, the FIIs have generally increased their stake in HDFC Bank. Right now they have decreased it. One of the main reasons why the FIIs have generally decreased their stake in HDFC Bank is because the inflation was rising up, the interest rates in the USA were rising, due to which money always runs to the safe havens. And banking stocks are generally much more volatile. I mean, from the emergent economies, as the inflation rate increases, as the interest rates rise up in the Europe and the American markets, the money starts flowing out from the emerging markets such as India and China, and starts going out there. And these FIIs and DIIs will be will definitely be returning back. There's no doubt about that. The domestic institutional investors, they have invested a lot. These are like the typical mutual fund houses and all this stuff. If you look at this SBI Nifty 50, all these kinds of mutual fund houses, the government have generally maintained this thing. That's not very much important. The public has generally maintained constant. There's no problem with that. That's one of the main reasons why I see this stock is amazing, guys. And if you're looking at the stock analysis, if you basically type HDFC Bank, right? I mean, if you're just looking at HDFC Bank, there are two stocks, guys, HDFC and HDFC Bank. My bullishness is on HDFC Bank, not the whole HDFC Corporation, because right now the mortgage rates are increasing, the home loan rates are increasing, the interest rates are up. So it's going to be very hard for people to pay their home loans on time. So that's one of the main reasons why I'm not focusing on their home loans and credit kind of like business. I'm focusing on the banking business, the financial services business, which I am very interested in. If you're looking at 1 year, 7.14%. I mean, for banks, just HDFC, if you look at the 5 year return, it's like CAGR of approximately 13%, which is actually quite good, which is also quite less for a bank such as HDFC given its market share in the industry. So HDFC Bank still is, there's still a lot of run up that is left for HDFC. And the 2023, I really predict that HDFC will be the winner for 2023. So 92% of the analysts, they have also suggested buying the stock. There's low risk. It's a large cap stock. It bases on financials. The growth is very good as well. So far it's a very good stock. The third stock, or I'm just going to stop with three stocks today. The last stock which I think I'm going to consider today is Whirlpool. How many of you have not heard of Whirlpool, right? Everybody buys its products. Everybody loves its products. So why is the reason why I'm exactly so excited about Whirlpool? If you look at it as ROCE, right? 10.7%. Initially, it used to be 20%. See, when you're considering about the industry in which the Whirlpool of India is sitting, it is in the consumer durable industry. What are consumer durables, you ask? These are things that you use daily. They are the washing machines, they are the geysers, they are all the kitchen appliances that you use, the fridges and all you use. So consumer durable industry has a very complex supply chain. What do I mean by that? It means that there is a hell a lot of people involved, a lot of processes involved when it comes to the consumer durable industry. Now, what do I mean by that is there is something called as the bullwhip effect. If you really want to know about this, I would really advise you to look at this comment made by Mr. Michael Burry. He's an American investor. He has told about this bullwhip effect that, see, typically because the consumer durable industry has a lot of supply chains. That means first these people have to, gather the raw materials, and they have to assemble them, and then they have to kind of like have the logistics done, and then they give it to the and then they are basically giving it to the retail buyer, the wholesale shops, and they sell it to the customer. So if there is any much, so right now what happened is the spending has gone down, this purchasing power of the people has gone down because of inflation rising up. What generally happened was people had reduced amount of money in their pockets, due to which they were not able to buy most of the stuff. They were like, okay, we're going to wait for one more year. I mean, it's just a fridge, it's just a washing machine. We're going to buy it some another year. Due to which, what happened was that some of these old left up kind of like stocks in 2020 and afterwards, a lot of accumulation was done. And this guy who is the shop owner, he says, well, what is this product that you've given me? It's not selling. And they give this the whole thing, and these people disassemble it and all. So you could see that there's a very big supply chain involved. So even a small change in the retail investor side, you will see that the waves generally generated across the whole thing would be very high. This is called as the bullwhip effect, right? This is called as the bullwhip effect. The consumer's decision rides on how these people like Whirlpool makes money. So it's not that, if you look at it, this is completely much evident in its whole thing. See, if you look at the sales are generally on their rise, guys. The sales are generally on their all-time high. The problem is with the operating profit margin. I told you again, the prices of their essential goods that are required for manufacturing the products has increased, due to which the profit margins have been affected. Typically, they used to maintain 11%, 8%, now 9%. Now they're maintaining to 6%. Will this stay as easy, the same forever? See, there are some stocks which have a cycle. It's not a cyclical stock, but the problem is right now they have a problem in maintaining their operating profit margins because of increasing expenses. But if you look at their balance sheet, I mean, if you're looking at their balance sheet, not their, if you're looking at this cash flow statement, if you go to their investing activity, they have purchased a lot of investments, they're increasing it. If you're looking at cash flow from operating activity, they have basically acquired many companies and all, due to which just spending on expansion these days. And if you're going to look at um, the fixed assets, if you're looking at it, if you go down, you can see that their inventories, the plant machinery has gone up as well. That means, why are these people increasing their plant machinery and etc.? It's because they believe that in the future there's more supply to come, and in order to meet the more demand to come, and to meet the demand, they're increasing their inventories. Now, when will this pent up inventories show a lot of profits? Will it be in the next 2 days after I told you to buy, after I told you to buy this stock? No, it's not because of that. It's going to take 1 year or 2 years, but things are going to be back. The main reason why I'm so bullish about this stock is because if you're looking at the curve right now, this is the 200-day moving average. It is approximately 1497. Now it is trading at 1927, right? I mean, if you're looking at this 1657, it's below that. If you're looking at its 3 year chart, right? If you're looking at its 3 year chart, it's actually trading at 2672. So I really believe that it's a great entry point. But even if you're looking at it, it can go up like this. You have an 85% gain to be made approximately in like 3 years or 4 years. The only thing you need to be is very much patient with these type of stocks. But if you don't want to do anything, you don't want to hold up these stocks, the first two stocks can be considered HDFC Bank and Asian Paints. I'm sure you will be sitting at lucrative profits if you're going to hold them for the long time. But do not wait for the market to fall down even more. No one, literally no one, not even Warren Buffett, not even the president of United States, will be able to say when the market has completely completed its bull run, has completely gone down, this is the utmost bottom. Nobody will be able to say that. So you need to hold your horses when it comes for holding good quality companies, when you're buying them at very good prices, because things eventually will revert back to the mean. And that's one of the main reasons why I'm so bullish about this three stocks that I'm going to talk about. And there's another stock that I'm bullish about that I'm not going to talk about in this video. But if you consider my video nice, then you can basically maybe like and subscribe to my video for more such information. Thank you so much.